Hey everyone, it's San UBA here, and if you're new to the channel, welcome. Today we're going to be talking about Forex trading. Specifically, we're going to dive deep into 3 huge mistakes I made when I first started trading Forex that ended up costing me thousands of dollars. Look, everyone makes mistakes when they're starting out, but the important thing is that we learn from them. So, in this video, I'm going to share my experiences with you so that hopefully you can avoid making the same mistakes I did. Let's get started. Okay, so the first mistake, and probably the biggest one I made, was over-leveraging my trades. Now, if you're not familiar with leverage, it's basically like borrowing money from the broker to amplify your trades. So, let's say you have a $1,000 account and you're using 50-to-1 leverage, you can actually trade with $50,000. Sounds great, right? Well, it can be, but it can also be incredibly dangerous if you don't know what you're doing. I remember one time I was so convinced that the euro was going to go up against the dollar. I had done my analysis, or so I thought, and I was feeling really confident, so I decided to go all in, using the maximum leverage my broker allowed. I put like 80% of my entire account on this one trade. I was glued to the screen, watching the pips move up and down. For a while there, it actually looked like I was going to be right. The euro went up a few pips, and I was already imagining all the money I was going to make. But then, the market turned, and it turned fast. The euro started to tank, and my position was quickly moving against me. I started to panic. I didn't know what to do. See, the problem with leverage is that it amplifies both your profits and your losses. And in my case, it amplified my losses big time. My account was shrinking faster than I could process. I ended up getting a margin call from my broker, which means they basically liquidated my position because I didn't have enough money in my account to cover the losses. Just like that, a huge chunk of my trading account was gone. I was devastated. I couldn't believe I had been so stupid. That experience taught me a very valuable lesson about the importance of not over-leveraging. It's one of the fastest ways to blow up your account, and trust me, you don't want to learn that lesson the hard way like I did. Alright, the second major mistake I made was not taking risk management seriously. I used to think that risk management was just something that, boring institutional traders worried about. But let me tell you, risk management is crucial for any trader, no matter how big or small your account is. When I first started trading, I would just kind of wing it when it came to risk. I'd enter trades without really thinking about how much I was willing to lose. Sometimes I wouldn't even set a stop-loss order, which is basically an order that automatically closes your trade at a certain price point to limit your losses. It was like I was driving a car without wearing a seatbelt. I remember this one time I was trading the British pound and I had this gut feeling that it was going to go up. I didn't really have any strong technical or fundamental analysis to back it up, it was just a pure hunch. So I put a sizable portion of my account into this trade without setting any stop loss. Big mistake. The pound did move in my favor initially and I was feeling pretty good about myself. But then, out of nowhere, some news came out that completely blindsided me. I don't even remember what the news was exactly, but it caused the pound to plummet like a rock. I just sat there, staring at my screen in disbelief as my account balance dwindled away. I had no plan, no exit strategy, nothing. That experience was a real wake-up call for me. It made me realize that trading without risk management is like playing Russian roulette with your money. You might get lucky a few times, but eventually, it's going to catch up to you. Chapter 3. Chasing the Market, Why Timing is Everything. Alright, the third mistake I made as a beginner trader was constantly chasing the market. You know how it is, you see a currency pair skyrocketing on the charts and you think, I gotta get in on that action. FOMO, or the fear of missing out, is a powerful emotion, and it can really cloud your judgment when it comes to trading. I used to spend hours watching those financial news channels, you know the ones, with the flashing tickers and the talking heads yelling about the markets. And every time I saw a big move, I'd get this urge to jump in right away, thinking I could ride the wave to easy profits. But here's the thing about chasing the market. You're usually entering a trade at the worst possible time. Think about it. If a currency pair has already gone up significantly, the chances are that the move is already overextended, and you're buying at the top. I remember this one time I was watching the news, and they were talking about how the Australian dollar was surging because of some positive economic data release. I got caught up in all the hype, and without doing any real research or analysis, I decided to buy in. I thought I was so clever getting in on this sure thing. Well, guess what? As soon as I entered the trade, the market reversed course and started heading south. It turns out that the news was already priced in and I had bought right at the peak. So there you have it. Those are the 3 biggest Forex trading mistakes I made as a beginner. Over-leveraging, ignoring risk management, and chasing the market. Trust me, I know how tempting it can be to try to make a quick buck in the Forex market. But believe me, it's not worth risking your hard-earned money on impulsive trades. I hope you found this video helpful. If you did, make sure to hit the like button and subscribe for more trading tips and personal finance advice. Thanks for watching, and I'll see you in the next video.